Hi, this is Zach Smith, your local friendly mortgage guy, coming at you from our world headquarters here in Littleton, Colorado. Just wanted to pop on here really quickly and do a short video about a question that I think that is on the minds of a lot of people right now. And is there a recession coming? There's a lot of data out there that is pointing to a recession. A lot of people think that the Federal Reserve has waited a little bit too long to lower rates. I am of that opinion as well. So let's dive into it here. Once again, my name is Zach Smith. I own Chariot Financial. We're mortgage brokers here in Colorado. And I've been in the industry for 21 years. So I was, in the industry back in the days when it was, if you could fog a mirror, they'd give you 100% financing. Or in 2008, when the bottom just fell out of the housing market, the Great Recession happened shortly thereafter. Again, I've been voted as a 5-star mortgage professional for over, about 7 years now. And only 17% of mortgage professionals here in Colorado can say that. Also, I'm a certified senior advisor as well. So that is an accredited organization that helps improve the lives of seniors. Our specialty is reverse mortgage planning. So, it was important for me to get that designation. So let's dive into it here. Is a recession coming? Well, we were out at Chatfield State Park here just this last weekend. My little boys getting into the Boy Scouts. And what's the Boy Scout motto? Be prepared. I love that motto, and it's just like Eisenhower said, the great president and general, plans are worthless, but planning is everything. So a lot of financial advisors, the talking heads you see on the financial networks and things like that, they are thinking that, yes, a lot of the indications indicate that, there is a recession coming. So before we start, I know there's people out there that are, and this is, I do coaching calls with a great coach. And he always talks about the front side and the back side of conversations. The front side is always positive, looking forward, let's try to fix a problem. While the back side is, oh, well, who's to blame? Who can we point the fingers at? I know it's an election year, and I don't want to come off as political. I have my own political views, but I don't feel like I should share them here. This is not the format. But basically, I did want to offer some insight in regards to this. So there's a great podcast out there by Mr. Stephen Dubner of Freakonomics.com. The link's at the bottom here. And he basically had a bunch of different people from all areas of life kind of discuss this subject. So, if you believe The Economist, the president has a lot less power than most people think, especially when it comes to the economy. If you listen to the politician like John Ashcroft, the president's most important job is to call people to their highest and best. And if you listen to the constitutional scholar, every president comes into office thinking he's got the keys to the kingdom, only to discover that every door is double locked with a deadbolt. And, that's kind of the way we wanted it as a country. We wanted to get rid of kings and build a democracy that works a lot like a market. Now, like any market, it has dynamic ecosystems, lots of inputs, lots of outputs. And a great example of this is the housing market. I'm a Colorado native. I've lived here mostly all my life since late 80s. And, there's a sentiment among natives that are entering into the housing market. They're looking at these starter homes where, 10, 15 years ago, you'd be paying $150,000 for a starter home here in Colorado. Maybe not 10 years, 15 years maybe. So they go out in the market and they find out these homes are $500,000, $600,000, $700,000. And they're thinking to themselves, what the heck? There's no way I would pay that kind of money for that house. Well, a house is worth what someone will pay for it. And the thing is that if you look at like California and places like that, you see these tiny little bungalows that are going for millions of dollars. People don't think it's possible for real estate to appreciate like that. Well, it is, and it has. So the point I'm trying to make is that the market, the dynamics of the financial markets, they're a living, breathing thing. There's not a whole lot of control that any one person has over these markets, in my opinion, because they are living and breathing, and they're based off of what? Supply and demand. So if there's, for instance, back in 2020, 2021, when the housing market was, appreciating at 20% year over year, I remember clients that were, getting beat out every time because there's 40, 50 offers on every property. So they said, you know what, to heck with this. We're going to offer 90,000 over asking prices to see if we can win this offer. And you know what? They lost. They were offering 90,000 over asking, and they still lost out to somebody who was offering more. So when you ask yourself about markets, financial markets, I think it's really important and fair to say that, these markets are living and breathing things. It's really hard to pinpoint. And of course, you can go into the weeds about policies and stuff like that. But in the end, it's my opinion, they have very little to do with the actual marketplace itself. So we'll keep going. Hopefully, we've got some people still watching. We'll see, So what is a recession? A recession occurs when a region's economy declines over several months or even years. During these periods, the region's gross domestic product, or the total value of the goods and services it produces, drops. At the same time, dramatic changes may occur in the price of commodities like oil or gas. Previously profitable industries may suddenly become less valuable. Consumers may see increased inflation or higher than normal levels of employment. As a result, consumer confidence suffers, meaning that people will be less willing to spend money than they usually would. So, what exactly happens in a recession for those of us who, I lived through the Great Recession. I was doing mortgages for Pulte Homes and Del Webb Communities back then. It was, we were doing a lot of business, and then all of a sudden overnight, there was nothing. The bottom just dropped out. So, back in that time is a really tough time for a lot of people, myself including. So during periods of recessions, companies may make fewer sales and economic growth kind of stalls. To cut rising costs, organizations may be forced to lay off large portions of their staff. Hiring slows down, making it difficult for newly employed to find another job. One of the things that sparked this was an article about Walmart right now. They've said some things out in the public that are kind of hinting towards a recession. Investments like stocks and real estate tend to lose money, meaning the retirement and other savings accounts can suffer. Lenders may also respond to the increased financial uncertainty by raising their lending requirements, making it much more difficult for people to qualify for new credit accounts. So basically, when all lending, whether it's credit cards or mortgages, everything, it's all about determining risk. And what do we mean by that? Well, in the mortgage world, you go into the bank and you ask for 400 grand to put for a home, for a mortgage. The first thing they ask you, oh, that's great, we're happy to help you. How are you going to pay us back? What kind of a borrower are you? So, they won't judge you based on your race, color, creed, orientation, but you pull that credit, they're going to judge you. They're going to judge you based on that credit. It's going to determine one of the risk factors along with your income and your assets and the amount of debt that you have. So, during a recession, if people aren't working or things aren't moving as quickly in the economy, some of these banks are going to say, you know what, let's pull back the lending a little bit until this storm, resolves itself, because we don't want to be caught like, in 2008, there was a lot of folks who actually a lot of banks suffered during that time. Oh, the poor banks, right? Oh, poor banks. But they did take a lot of losses back then. In fact, some of them just dissolved entirely. I actually started working with Chase Bank after the Great Recession. They swallowed up Washington Mutual and Bear Stearns, both collapsed. So it's pretty tough time back then. So let's kind of go forward here. So is a recession a good or a bad thing? Is this a silly question? Is this a trick question? Am I being punked right now? Is someone punking me? Is that still a thing? I don't know. But is it good or bad? That's really the main question that I would really like to kind of plant that seed with people viewing this. Is a recession a good or a bad thing? Well, some goods are going to become less valuable. I mean, based on the previous slide. So things like the stock market may go down, um, properties may go down. Well, there's Warren Buffett is, I think he's done pretty good for himself up there in Nebraska. He's known as the Omaha Oracle. He's been very good at his investments, and he follows a lot of rules that he doesn't break. Well, he did pretty darn good during the 2008, 2009 recession. In fact, he made a lot of wealth during that time. He's quoted as saying, are when people are greedy, be scared. And when people are scared, be greedy. I mean, I know it's a dog eat dog world out there, but that's how he's amassed a lot of his wealth, is by being very shrewd with his choices. Let me give you an example. So during the Great Recession, one of the things that Warren Buffett did was he went out and he bought up all the railroads all across the land. People were looking at this purchase and they're thinking, gosh, he's lost it. He's finally lost it. Why the heck is he buying up all these railroads all over the nation? What is going on with this guy? Well, what he knew that everyone else didn't was that the railroads actually have a lot of power here in the United States. Why? Because they have land easements everywhere. Back from the 1800s when they were laying their tracks. They have land easements everywhere. Not only that, but with the way the economy is going, more green energies and things like that. So it's been a very, very profitable venture for him because he got them for such a good price. Housing industry is no different. During a recession, when the property values went down, guess what? There was a lot of opportunity to buy homes for pennies on the dollar. And how did that work out for folks? Well, I think we've got 400% increase from the 2009 prices or something like that here in Colorado. So I don't want people to think that a recession is necessarily a bad thing. One thing that I learned during the recession is that there is always opportunity when you're investing. Always. You just got to find it. There's always a silver cloud there. Silver lining. So what action can most Americans take if there is a recession coming? Recessions are unavoidable part of the economy, but you can weather the storm by anticipating challenges early and preparing for the future. Once again, just like the Boy Scout motto, be prepared. With that in mind, here's 5 essential steps that you can plan for uncertain times. Number 1, find out where you stand. This is always an important part. I think it's hard sometimes, I run into this a lot with folks who are looking to get pre-qualified for a mortgage. They've had a long time renting. They know they want to buy a house, but they keep just putting that head in the sand because they know their credit's not the best. They know that maybe, they have, something going on that may impede their ability to purchase property. So in some cases, people are hesitant, and finally they get to the point where they're like, you know what, let's just do it. And I love working with people in that situation because I really truly believe in my heart of hearts that everyone should own real estate. Every single person should own real estate. And what I talk to a lot of my first-time home buyers about is, are you paying rent? Yeah, we're paying rent. How much are you paying? Oh, we're paying $3,500 for rent. $3,500. Well, you're already paying a mortgage. You're paying $3,500 per month. You're paying a mortgage. You're just not paying your mortgage. So again, starting off with first-time home buyers, let's find out where you stand, and then we can create a game plan around what you have going on. Let's say your credit's bad. Well, guess what? Your credit isn't a life sentence. We can still find out, okay, let's pull this lever, let's twist this knob, and sometimes the only remedy for credit is time. But at least you know where you're standing, you have a game plan. And guess what? Once you have a game plan, you have direction. So find out where you stand financially. Take stock of all your personal financial priorities. How much cash do you have on hand? Do you have a reserve account? Do you have avenues to procure cash if you need it? So start thinking about these things. If you are planning or to be prepared for some sort of economic downturn. There's one constant in life, or some people would say two. There's two certainties in life, but one of the constants in life is change. So be prepared. We don't know what's coming down the road there. So find out where you stand. Take a good financial assessment. Secondly, and this is something that I've learned over the years, just working with people in my own life, taking note of some of the other folks that I have worked with. Prioritize your expenses. Now, it's not how much you make. A lot of people say, okay, let's say you got two people that make $150,000, person A, person B. They both make the same amount. Somebody will ask, well, what do I qualify for? What do I qualify for if I make 150,000? Well, person A may qualify for a lot more than person B. Why? Because person B may have a lot more debt than person A. You might have a $1,200 car payment, person B. So what does that mean? Well, it means that they're going to qualify for a lot less. It's not how much you make. It is not how much you make. It's how much you spend. And, I know some people out there, oh, it's how much you keep. Same thing. But it's how much you spend. So keep that in mind. So make a list and prioritize. And personally, I think it's very important to get it on paper. They say a problem is 50% solved if you get it on paper. So what I would do is I would take all of my expenses, and I've done this before. This is not something I'm not just a pretty face here. I actually have experienced these things. So I'm trying to impart this wisdom because it's really helped me in the past when, I was going through that Great Recession and things like that. But really get everything prioritized and on paper. The big thing nowadays is subscriptions. Oh my gosh. How many subscriptions are we paying for? How much are we paying for them? How often are they coming out? Are we even using the service anymore? So that's number one thing. Get all your expenses out and find out, what do you want and what do you need? Do you really need all the streaming channels? And do you really need subscription to the Wine of the Month Club or the Jam of the Month Club? For those of us who enjoy the vacation movies, the Jam of the Month Club, do you really need all that stuff? Well, take a good, honest inventory of all your expenses and find out what you can do without and start cutting it. And can you roll debt into a mortgage? Can that help? You got all these companies out there. Oh, pay off your high credit card bills, roll them into a mortgage. And, I have to say I'm part of that crowd. I am part of those guys saying that. Is it a good idea financially? No, it's not. It's not. Because then you take those credit cards and you're paying them for 30 years. But what I would like to impart with those of you still watching, it's not a good idea to do that. But guess what? What's the alternative? If you've already collected that debt on those credit cards and you're paying 25% interest each month and you have all of those, what's the alternative? Well, folks out there, these financial gurus, well, just work hard at paying it off. And, but what if you're $40,000 in credit card debt? Yeah, you can do that. The practical answer and the smart answer and the canned answer that you're going to get from all your financial people is, well, you don't roll it into your mortgage. Just work really hard, become disciplined, and pay it off. How many people are actually going to do that? I mean, there are a lot of people. I don't want to discourage you if you're on that path and you're making those choices. I don't want to discourage you. Keep going. I'm in your corner. I'm your biggest cheerleader right now. But if you're not able to do that or you feel like it's insurmountable, well, roll it into a mortgage, roll it into a line of credit, and then take the same amount that you were going to be paying, those minimal payments. If you have that discipline, it's not going to change if you have the credit card debt or you have it all rolled into one debt. If you have that discipline, you're going to succeed no matter what. So in some cases, if you roll all of that debt into one umbrella, it just makes it easier for you to chip away at it. So you can still pay off all your debt. You can still pay off everything. Just makes it a little bit easier. And guess what? You're not paying 20% on the mortgage loans or on the credit cards. So just something to consider. Next thing, consider career opportunities. This is a tough one. It's tough when you have to reinvent yourself, especially the older you get, especially men. Men, we have a tendency, to identify who we are with what we do. I see this all the time when I work with retirees. They spend their whole life, as a CPA or something like that. Then they retire and it's like, well, who am I? Who am I if I'm not the CPA guy? So I think it's very important for people to have hobbies, and don't be afraid to reinvent yourself either. Try something new. Life is short. Don't look back on your decisions and say, oh, I shoulda, woulda, coulda done this. Branch out. And in some cases you may have to, especially if you're looking at different industries. So, recessions often result in high levels of unemployment. So it's important to consider tough economic times that could affect your career and have a backup plan should you face a layoff. So start by refreshing connections with your professional network. This is a huge, huge thing. They just did a huge study about people. I've always thought that a 4-year university, it doesn't necessarily determine your success. It does tell your employer that, yes, you stuck it out for 4 years and you got something done. Or in some people's cases, 7 and 8 years. I won't mention anybody who's taken that long to graduate college, but some people have, and they're not doctors. Hint, hint. Basically, it tells your employer that, yes, but how much is your degree really worth? But one thing that you can obtain through a 4-year college degree, connections. Big, big deal. Making connections is a huge deal. And I cannot stress this enough. If you're still watching this video, make some connections. It's not what you know, it's who you know. Make connections. And if you turn on bad times or financial times, start remaking those connections. Social media is great for that. One of the beautiful things that's come out of social media is that you can still be connected with people. Yes, there's a lot of bad things that have come along with social media, but everything, moderation, can be good or bad. Be sure to consider not only your coworkers, but also any connections you have outside of your current employer. Having established relationships at a variety of organizations can give you a huge leg up in the job market. You might consider reaching out to your network via social media or offering to meet up in person or in coffee. I think that as Americans, we should be doing this much, much more. Most of our communication is like, right in front of the phone or via Zoom or whatever. I hate to break it to the folks watching, but we are primates. We're animals. We are a social animal. We would not be here as a culture, as a civilization, as mankind, had we not had to depend on each other for survival at one point. I don't think much has changed. We're still animals, at the end of the day. We're still primates. So primates are social creatures. So talk with each other, and it's a great way to develop relationships, long-lasting relationships. And I think it's healthy for us too. Just my opinion. I'm sure there's some stuff to back it up, but I don't have anything for you, dude. Just gonna have to take my word for it. Next, save. Where's Susie Orman at right now? She'd be preaching. You're preaching to the choirs. She's ringing that bell. Same thing with Dave Ramsey. A lot of those folks that are, I don't agree with everything. I definitely don't agree with everything, but they have a lot of good things to say about saving. And, I do a lot of classes. In fact, we do our reverse mortgage weekly every single week, Wednesday at 2:00 Mountain Time. Make sure you tune in live on our Facebook page, or if you want to see past classes or more classes, you can go to happyhousetoday.com, happyhousetoday.com. So that's my little pitch there. But we talk a lot about this, a lot about savings and what is going to be important long term. So saving for a rainy day is a fundamental principle of financial health. It provides a cushion against unexpected expenses, such as medical emergencies, car repairs, or sudden job loss. By setting aside a portion of your income regularly, you build a safety net that protects you from going into debt during tough times. This habit not only offers you peace of mind, but it also ensures that you're prepared to handle life uncertainties with confidence and stability. We can't predict everything, but we can be prepared. So again, be proactive. Like I was talking about, a lot of the folks who put their head in the sand, don't want to deal with their financial situation. They know they want to buy their own home, but they just don't know how. So they get overwhelmed and they just say, you know what, forget it. I'm just going to work on this later. Well, let's say in 2015, you said that. 2016, you said that, and you waited all the way till now to purchase a house. Well, you're paying $400,000 more for the same property when you could have been proactive in working on the situation to improve your finances. But so you got to be proactive. I really feel that in times of struggle that I've had in my personal life, I have found that if I just get up and I start taking action, good things happen. It's like a ripple in the water. And you may not see it at the time. You may think, oh gosh, I'm doing all this work and no, have nothing to see for it. It's like you're planting all these seeds and nothing's coming up. Oh gosh, what's going on? But you keep planting the seeds, you be proactive, and guess what? Good things start happening. So being proactive with your financial situation is crucial for long-term success and stability. By taking control of your finances, setting clear goals, creating a budget, and regularly reviewing your expenses, you can avoid unnecessary debt and make informed decisions about your money. Proactive financial management allows you to identify potential issues early, so take advantage of the opportunities and stay on track towards achieving your financial goals. It empowers you to navigate life's challenges with confidence and ensures that you are building a secure and prosperous future. Have your future self go back and say, thank you, thank you, thank you, past self. Or, thank your future self to your past self. Like if you were going to tell your 18-year-old self something, what would you tell it? Well, do that for your future self right now, today. Okay. That's all I got for you today. I thought I'd put together a quick presentation because I think it's on people's minds right now. And I thought I would just speak on the subject. So once again, I'm at your service. I really feel that, the best way for me to grow my business and to be successful is to help other people succeed. Guess what? If I help you succeed, chances are pretty good I'm going to succeed. And we got a win-win situation there. So if there's anything I can do to be of service, don't hesitate to give me a call. My number is 720-502-3278. Or you can visit me or our team at mychariotloan.com. That's mychariotloan.com, mychariotloan.com. Thank you so much for your time. I hope you have a great rest of your day. And may blessings rain down on you and your family like that of 1,000 suns. Thank you so much. We'll talk to you soon.